All right, guys, welcome to the Buff Show.
Welcome.
Today we got a good little market update coming your way. So it is Love Day, Valentine's Day when we're shooting this, and we're reviewing January's numbers. Just came out hot off the press, and this is going to be good to go over. I think a lot of people I talk to right now, like I had probably 3 conversations like this yesterday. They're like, man, I'm just waiting for the market to drop. Yeah. And I think after reviewing these numbers, it's going to give us a good insight as to what the market's doing. If you're waiting for the market to drop, you should have been buying a year ago.
Sad to say, it's probably too late for that.
Yeah.
And we'll back it with numbers on why we're saying that.
Yeah. We'll look at everything and then you guys can make the guess or the decision. But so currently rates were mid 7s or 7s, depending on what lender you talk to and
your credit score
and how much you're buying down the rate and stuff. But let's start out with our new listings. You got it?
Yeah. So last January compared to this January, we've got 10% more new listings. So more inventory coming onto the market, which is good because we don't have enough inventory.
10%. So
10% more.
10% more homes available, more properties than last January, which is good. That means more people are like, I'm ditching the rate. I'm selling my house. Like the problem we've had over the past year, everybody's attached, married, just welded to those low 2-3% interest rates. It's hard to leave those behind, but more and more people are starting to get off the fence and be like, rates aren't changing currently. It's time to make a move or make a decision.
Yeah. I think it's worth noting from December to January, we've almost doubled in new listings. And so I think that's a good indicator that we're turning this corner and people are like, okay, holidays are over. All right, let's do something.
Yeah. Well, and we're just in a better spot even from last January.
Yeah.
So like this 2023 was kind of a rough year. Like it just felt like turtle speed.
For sure.
Okay. Pending sales. So more listings. What do we think pending sales are going to do? They're up 3.7%. So that's from January of 2023 to January of 2024. So we're up almost 4% on homes that are under contract or pending. So
closed sales, same story. So last January compared to this January, we're actually up almost 10% more.
I mean, 9.9%. Yeah. And that's a significant jump.
Yeah.
In my opinion.
Yeah.
A 10% jump, 10% more closings this January compared to last year.
And what's crazy is rates haven't even improved that much.
No.
Right?
No.
So if there was something substantial like the Fed is saying is going to happen, that 10% is going to go to what?
Yeah. Who knows?
The moon?
That is true. That is true. So days on market until sell. So we are, I mean, if we have more inventory, more pending, more closings, what do we think that's doing to days on market? It's pushing it down. So we're actually 6% less days on market. And I'm going to tell you the number. So January of 2023, we were 66. We're down to 62 average days on market, which is good. That means homes are sitting less time on the market. There's a little bit more activity happening on them. I mean, this is good things. The market's heating up. I guess it's good depending on which side of the fence you're on.
Yes. Yeah. So median sales price.
Ooh, this is the one everybody's curious about.
Yes, they always want to know. Last January compared to this January, prices have gone up 6.8%.
Jeez.
So if that continues, which there's no reason for it to not continue, that means those that were waiting for a price drop missed the dip.
Right. Yeah. We're trending upwards now. And I think as rates, like the Fed has come out and said, hey, we're planning on dropping rates this year in 2024. We don't know exactly when. We're planning on doing a few rate drops, which should affect mortgage rates, most likely. And it's if that happens, we'll see. I mean, people are just tied to their payments. Like, how much is this going to cost? So we kind of have that payment set. If rates drop, you're going to see multiple offers. And I think it will just change the price of the homes as well.
If sellers know that their buyers' purchasing power is better now because rates dropped, then why would sellers not try to list or get a little bit more? So
Right.
economics says it has to go up if rates come down.
So average sales price. Average sales price, we're up 7.6% from January of last year. These are big numbers. I mean, if we go back and look, like it was a year ago, we were seeing decreases in the price, but then it was all stagnant. We were like 0.8, 5%, 4%, 2%, 5%, 2%. And now we're finally like 8%, or 7.6%. Like the numbers are getting bigger. The swings are swinging.
Swingier.
More swinging.
Yeah. Okay. Percent of original list price received. Last January, we were at 93.9% of listings would get what they were asking. And then this January, it's 95.5%. So 1.7% more listings are receiving their original list price.
Or is it, I think this number is...
Did I phrase that wrong?
I think you phrased it wrong.
I know how I phrased it wrong. It's not the amount of people that are receiving it. It's the percentage of the ask or the list price.
Yeah.
But either way you slice it, what that's saying, it's similar. But what it's saying is that the buyer's market is becoming more competitive. They're not getting as much off of their purchase.
Yeah. I mean, you on average, sellers are dropping 4.5% right now.
Yeah.
Which is up almost 2% from last year. So
yeah.
It's just homes are sitting less time on the market. Like it's just, we're seeing it. Like there's more pending, more closings, less days on market. So of course, sellers are going to start to receive a little bit more for their properties.
All indicators that we've reviewed so far are pointing towards it's heating up.
Yeah. Housing affordability index. So this basically determines or measures how affordable the housing market is. And it takes in the median household income and the median price home under prevailing interest rates. So last year we were 79. This year we're 70. So we're actually down 11%. 11% less affordable.
No, more affordable.
No, less.
Oh, right. Yeah. The call. Okay, I'm not that dumb. The columns, the way they list it is last year's listed second, and so you gotta flip it around.
It's all right.
Sorry,
it's all right.
I'm sorry. We've only done this how many times? Yeah.
I lost to Austin. I had to buy him sushi last time, but so things just got less affordable. When last time you were saying they got more affordable, and they did get more affordable, but now they're less affordable,
right?
Because I think rates haven't dropped that much. Mm-hmm. Market's heating up, more buyers are coming out, and we're just seeing more pending sales, more closings, less days on market, median sales prices going up, and the rates aren't changing that much. So that's why. But 11%, geez.
I think it's because sellers have heard rates will drop, so they're already trying to cash in on that announcement, but rates haven't actually dropped. So then it's like,
but they're still getting it, which is crazy. Like
that's true. They're still getting it.
I mean, they're not getting it. They're 5% off. Like it's still not. They're not like 100% of list price received. But we're just seeing things heat up. It's it's not getting more affordable.
No,
is what we're saying.
Not
unfortunately.
Yet. Not yet. Once the Fed actually...
Once rates come down, sure, it could get more affordable, but then we'll just see house prices jump back up. Because buyers will be like, ooh, I can afford more.
Yeah.
And I think just naturally, prices will shift. I don't know. I could be wrong, but...
We'll see. We're on inventory of homes for sale, correct?
Yep.
Okay, so last year we had 10,000 homes on the market. This year we've got 9,122. So there's 9.5% less homes for sale, meaning they're going quicker.
Okay. I'm just, I don't know.
Because we just talked about how there's more pending, correct?
Yeah.
More pending. However, there's
more
less
active. But more closings too. So there's more pending, more actives, more pending, and more closings. Mm-hmm. And so I think that's it's eliminating some of the inventory that's out there. Homes are sitting less on the market right now. So That's how I would
Our
interpret
days on market
Yeah.
are less. That's
Yeah.
true. Okay.
Month supply of inventory. So the inventory of months for sale at the end of a given month divided by the average monthly pending sales from the last 12 months. So we were at 2.9 months supply. Last year, we're at 2.8%, a negative 3.4%, again, indicating it is more of a seller's market than a buyer's market.
So not percent, but months worth of supply.
Yeah. So it's, I think a brief recap of this, we can all agree based on these numbers
Yeah.
that the market is heating up. It's becoming more of a seller's market. I mean, I would still argue last year was still a seller's market.
Statistically, it was.
Yeah. January of last year is still a seller's market, and it's pointing to even more of a seller's market as we head into 2024.
And what's crazy is spring is the notorious, rush.
Yeah.
Well, these are just January numbers. Like what are we going to be saying next month or the month after that?
That is true. It'll be interesting to watch it unfold, but I, like everybody that I follow and listen to and in the real estate space, like I think this year is going to be another busier year. Like I think there'll be more closings. I think people can only sit on the fence for so long, and everybody's just been waiting for prices to drop. I've been waiting to make that move. And I think we're seeing that it's just not changing.
Yeah.
Like I would have guessed, if I was a betting man, I would have bet the farm that when we went from 3% to almost 8% in interest rates, that would have crushed us.
Right.
And we did see a drop, but not that much of a drop.
In prices?
Yeah, in prices.
What was it? I think it was a 10% decrease in price at
Well,
the low point.
we could go back and look at the median sales price. And it's funny because I had some sellers that I sold a home for in November, and they, it was in a trust. The parents passed away in March or April of 2022. And so they needed to figure out what the value of the house was when we sold it. And it was like a solid 10% at least less when we, from March of 2022 to October of 2023. So I think we have seen a significant drop. Like looking at the median sales price, I would say the highest point we were probably pushing 550, and at the lowest point we were
475, maybe
475 probably. So that's a $75,000 swing. And when you put that into perspective, I don't know exactly how much of a drop that is, but
it's like
15%, maybe 20%.
Yeah.
So we did see a significant drop, but the market's rebounded. So the time to get in was really, it was
April.
it was end of 2022, beginning of 2023.
Yeah.
Is when the lull
April
was.
April 2023 had the biggest last year, April to that month drop of 10%, a change of 10%. But the whole dip, the best part of the dip was end of 2022.
You're right. And again, we probably saw, depending on your area, a 10 to 20% drop in price, which is significant. That's significant. But rates were also if you did buy a house at that bottom point, you were probably 8%.
Right.
And that's not fun to do. So I don't know, it's going to be interesting to watch, but I could see us, I feel like the real estate market's like Bitcoin now. It's just
total speculative.
Well, and it's cheese. It's just so hard to predict and know. And I think that's where it just comes down to, you have to make smart moves, and you can't wait on the market and really try and time it. 'Cause it's unless you have a crystal ball, it's super hard to predict.
Pick your poison.
Yeah.
You want a terrible rate, or do you want the terrible price?
Right. Well, and I think if you know what you're after, keep an eye out. You'll know when it feels right. You'll find the right property, and then you'll live happily ever after. It's just getting to that. It's getting to that point. That's hard. So anyways, happy Valentine's Day. When this goes out, it'll be after Valentine's Day, but
we were thinking about you though.
We were. Yeah. So anyways, until next time, stay tuned. Thanks, guys.